Facebook's the kind of like prime example of that as well. Meta, they doing massive buybacks as well. I actually wrote a piece just last week where they're really becoming a lot more like Apple. They're realizing that shareholders care about cash at the moment in a way that they perhaps didn't in those heady years a few years ago when it was all about growth. They're not exactly value stocks, but there's a massive pivot which, is sensible given the market dynamics.
And we actually saw Meta initiate a token dividend, but kind of a dividend in line with a yield that's in line with Apple. So maybe that's a little bit of a trend there, Alex.
It certainly looks that way, and you think also about all the increased focus on efficiency, which is fortunately a euphemism in many cases for job cuts. When you look at the sort of average revenue per employee at a company like Meta or like Amazon, it fell massively actually in the years up to the pandemic because they were just hiring with such gusto. What we've seen in the past sort of 6, 8, 12 months is that there seems to be an increased focus on that number, that they have realized that their employees they're working less efficiently essentially because they have too many of them. So we've seen massive reductions in headcount as a consequence.
So, Alex, we did get Uber, another one of those names, one of those gig economy companies that's really come into its own with maybe some new management with Derek Khosrowshahi. Now they've got a buyback here. That seems to validate them as, I guess, adults in the room kind of thing.
Yeah, and it's like, ultimately, it's not a company that's growing anywhere near at the pace it was. If you think about back in 2022, when you had of course, they did some acquisitions as well, which turbocharged it, but revenue almost doubled in a 12-month period. Now the market's looking for a sort of 15-16% growth rate this year, but crucially, it is now profitable, right? Yep. That was not the case for the most of its existence, throughout 15 years or something of its existence, only a decade. It's not a profitable company. Now, that's why it's interesting as well with Lyft at the moment, because they are expected to post a profit, at least on an operating basis, for the first time this year. That's meaningful. It shouldn't be, probably, given the way we've used to companies, but in the world of tech, it hasn't been a given.
Alex Webb with us in London here on Technology. Alex, one of our emailers, thank you for emailing in, huge Alex Webb fan, and they say, Tom, cut the chat on these rich guys. Alex Webb, are you returning your Vision Pro? Are you just saying enough it doesn't work?
If I was a rich guy, I might have a Vision Pro. I am not. I don't know. I mean, it was quite interesting. There was a video of Mark Zuckerberg basically giving his, in a heavily inverted commas, review of the Vision Pro. Surprise, surprise. He says our product is a lot better. I mean, the case I've made before is that actually Apple doesn't need the Vision Pro to be a hit, right? It just needs to make sure that whatever Meta comes up with is not a hit. Because if it sacrifices the next, vector of computing to a competitor, then it's got a big problems in its hands. If
right.
Smart glasses, virtual reality, augmented reality, mixed reality, whatever you want to call it, if that doesn't take off as a category, it's not really the end of the world for Apple. The problem is that if it does, and Apple's not in there.
Is a non-financial guy, when the financial people say Apple has an ecosystem of, 2.2 billion, Paul?
Yep.
Something like that. Do you see that growing out ginormous to like 3 billion people? Is there just an endless Apple universe out there?
It's hard to see how that happens without really going down into more affordable devices, right? The reason that Apple has managed to continue growing earnings per share at a fair old clip, even as its top line growth has slowed or in fact last year shrunk, is because it's able to sell more of the top of the range devices. Devices where you're selling 256 gigabytes of memory at a 85% gross margin, right? Whereas the smaller, cheaper devices do not have those sort of margins. So, if you're going to get to that next market of another billion people, you probably need to be in the 100, 200, less than $300 range.
And I think
not a place where Apple's typically played well.
And when we talk to analysts, Alex, it doesn't sound like, let's just take India, for example. You could make the case that, boy, if they come in with a cheaper phone, man, they can get huge market share there. And analysts kind of say, nah, they're going to stick with their high-end products and wait for the middle class to grow out, similar to what they did in China. I guess that's the way they're going to go there.
It's really fascinating, India, because it's such a price-sensitive market. And if you look at Netflix's experience in that market, where you think of it, oh, we could have 400 million customers there. Well, actually, are you going to get 400 million people to pay, something in the order of $12 a month? Almost certainly not. Certainly not yet. It might be in a few years' time. Now, if Netflix can't convince people to part with, $10 a month, what's the likelihood of Apple being able to convince them to then actually download an iPhone? Buy an iPhone, then download a huge number of apps of, getting Apple Music, of getting iCloud, getting all these things which are the flywheel of earnings that come off the iPhone.